Hey, this is Justin with DayTradeTheMarkets.com on December 6th. And in today's video, I wanted to look at a couple markets really and talk about the idea of trying to determine when there is a lot of opportunity and you really need to try to capitalize on that versus understanding when a market is just not moving and you either need to be very careful or be very nimble within that market. I know this is something certainly that I've struggled with in my trading career, in that I think it's human nature that we sit in front of the screen, or in other words, we go to work and we think that we have to be doing something, we have to be trading. But if you really break it down, and this is something we try to harp on all the time, your job as a trader is to make the best. You're a professional decision maker. Your job is to make the best possible decision that you can with the information that you have. And if you can become a good decision maker and you make consistently good decisions, your results are going to show that over time. And so some days the best, the decision is you need to capitalize because this market is really moving and the trading is great and you need to really be on board. Other days, the best decision you can make is really to either sit on your hands or to just be very judicious in terms of taking any trades that you might take. There are days where the best decision was to not take a trade at all. I know that I've certainly learned that lesson the hard way more than a time or two. So I wanted to look at a couple different markets here. Let's just compare. Well, first of all, let's look at the emini S&P and just start with a 5-minute chart. And as you can see, obviously in hindsight, the market didn't do much today. Very tight range. You can see even on this 5-minute chart that, and if you watched yesterday's video where we talked about the first major structure of the day, you can see that we did not have any major structures at all throughout the entire day on this 5-minute chart. So, for example, there were no level 2 bars, aggression bars. There were no level 3 buying or selling aggression bars. There were no high velocity moves. Really no major structure. And that's a pretty good signal when there's no major activity that you either need to be very careful and just try to take little pieces out of the market, or you need to just stand aside. Now compare, and I'm going to drill down a little bit more and show some more on this. But now compare that, before we do that, to a 5-minute chart of the euro. And you can see here within, and I've just got this kind of set to the US hours of the euro, but pretty early on we had a couple very major selling structures, this level 3 selling aggression bar and this high velocity move made by sellers. We had a level 2 buying aggression bar that was rejected. So in other words, it's telling us this market's moving. There's potentially a lot of opportunity. There is some strong selling. There's actual evidence telling you that this market is actually moving and that the bears at this point, early on in the session, are pretty well in control. So when you have that information, and you can look at the same thing on yesterday I was looking at a 2-minute chart. If you want to look at compare again the ES on a 2-minute chart here, again, from early on in the session we had absolutely no major structures, just level 1 bars, kind of back and forth meandering in a pretty tight range. We didn't have a major structure until basically the cash close here in the ES. Now compare that with the euro 2-minute chart. Let me bring that up here. Again, you can see this market is really moving. It's taking off. The first major structure of the day is a level 3 selling bar with quick acceptance below. Bears are in control. So, when you have that information, and that's something we like to talk about a lot as well, is first put the market in context. Try to understand, is the market trending? Is the market consolidating? Who's in control of the market? Is it a bullish market, a bearish market, and so forth? So, in the ES today, we saw basically no conviction on either side. So if you're going to be trading that, you're going to look to be taking some fade trades or taking some pretty conservative trades where you're just trying to take a little bit out of the market. With the euro today, however, you can see pretty early on with the evidence that bears are in control. It's a pretty strong breakout, and you want to try to get on board that train if you trade the euro, obviously. And so, there are several ways that you can use to get into trades, obviously, but the first most important point that I'm trying to make is try to put the market in context. So we know with pretty good certainty that the euro is breaking lower. So we ask ourselves, how do we get into trades? One way is maybe you have another method that you might be using already. Well, when you have pretty good evidence that the aggression is very bearish, then you're looking to take any of the short signals that you might get in that other method that you're using. That's one way. Obviously, there are other ways as well. One of the main ones we like to use is what we call our confluence type of a setup, and that's when you have several pieces of evidence lining up. So obviously we've got some pretty good structure, and we saw that on the 5-minute as well, that the bears are in control. Our filter is strongly bearish. That's also telling us order flow is very bearish at the time. We've got here, we have a resistance zone that's come in real time right in this area here. So we have one piece of evidence, which is the structure. Our filter is another piece of evidence. Here's a resistance zone. The market tests into this resistance zone and even has a deceleration, which is an indication that means that even though this bar has a higher high than its prior bar, the level of buying aggression within that bar is decreasing or decelerating. So in other words, if you have a bar with a higher high than its prior bar and the level of buying aggression was increasing, well, then the expectation would be for the market to move higher. In a case where you have a bar who has a higher high than its prior bar, but inside that bar, what's going on inside that bar is that the level of buying aggression is decreasing. That's telling us that most likely the market's going to turn around. Now, you don't want to just blindly take trades off of decelerations, but when you can have them line up or form what we call confluence with other pieces of evidence, then obviously it's giving you a pretty strong edge. So I mean, that's kind of a textbook confluence trade where, again, you have a pretty good feel for the structure that bears are in control, filters confirming that, you've got a resistance zone, you test into the resistance zone, it even decelerates. That's kind of the textbook type of deceleration, or confluence type trade is what I'm meant to say there. Other trade ideas, we have the basic breakout trades, where if you have a level 3 bar on the low of the day, as a new low is being made, as you can see, just keeps repeating itself here, just take a breakout. There's other trade ideas that we call for example, we call our sweet spot trade, where you have a couple of level 3 bars right in a row like we have here. They overlap. That's an area where you would be looking to get short. The market didn't test up in there at that time. When you get a level 3 bar again and you have a pretty good sense that the market's bearish in that case, you would always be looking to sell toward the high of those level 3 bars. Now again, this market was so bearish it didn't really test into there so much throughout this day, but that's another trade opportunity that you're looking for. When you have a scenario where the market is so, in this case, weak that we don't test the high of these level 3 bars, we do have another trade called the continuation trade, that when you have immediate follow through below the low of a level 3, for example, like we have right here, a full bar below within 2 or 3 bars, then rather than waiting for the market to test up here with the what we call retracement trade, go for what we call the continuation trade, which is to sell toward the low of that bar. Same thing out here, try to sell toward the low of that bar, didn't quite get there. Here's another example here where we had continuation right away, try to sell to the low of that bar. And again, the market didn't quite reach there, but that's the thought process that you're using, that you're thinking about, is number one, you ask yourself, do I have a pretty good handle on the direction and the type of market that we have today? There's pretty good evidence, in this case, that there's a lot of opportunity in the euro. There was some news, but beyond that, the aggression is telling us that the bears are very much in control. So then we ask ourselves, step by step, how do we find a way to get into this market in a relatively low risk fashion? So that's kind of the thought process that we like to use, and that could be, again, using a method that you're already using, just confirming that the bears are in control and looking to take bearish signals. That's one way to do it. Or again, you're looking for the idea, like I was saying earlier, kind of the confluence type trades, or take the breakout trades. Whatever the case may be, that's the thought process. And again, if you compare that to the ES today, going back to here's the 5-minute in the ES, really nothing going on. Best thing is probably to stand on your hands, sit on your hands, or do nothing. If we go to the 2-minute chart, same idea. Really not much going on, not a whole lot of conviction one way or the other. So if you're going to trade, be real careful in this market. If we look at the 1-minute chart here on the ES, there was certainly some opportunity. Again, but you have to be careful. There's no strong evidence either way. We do have some situations here in the ES where, buying in the green zone here. Here's a green zone with a green filter, so a little bit higher edge. It bounced 2 points, 2.5 points. Selling in this red zone against the green filter doesn't make much sense. But again, buying at the green zone in the green filter with really no other evidence to work off of makes some sense. It bounced 2 points. Here's another situation. This bounced 3 points. So, you can kind of nibble, but you just have to kind of know, or I think it's important to know, to try to make sense of what type of market you're dealing with on a given day. The euro was very different than the ES today, and you need to have different strategies, and you need to be prepared and need to be able to make sense of that so that you can give yourself the best probability of success, on a given day. So hopefully that made sense. If you have any questions about that, let us know, and we'll talk to you soon. Thanks.